Oh my god, I just don't understand why people shop anywhere other than Target. Target pays $15 minimum wage and oh my god, Walmart's so dirty. Even though I pretend to be a liberal, progressive, amazing woman and I care about the poor people, but then I go to Walmart and there's poor people there. Oh, they're so gross. So I only shop at Target. And if you don't, well then screw you.
Ladies and gentlemen, I want you to guess who I am.
Hey everybody, here. Okay, I don't know how to analyze stocks and I'm old and I have a cat named Bussy Cat and I just go and read what other stock analysts say. And I just copy what they say, and then I act like that's my own analysis. So today we're looking at Target, and it has some upside, okay? 282, so just buy it.
That's right. That's Stockmo for you, ladies and gentlemen. I'm going after him very shortly. Freaking loser! Anyway, we're not talking about stink blow today. We're talking about Target!
Oh my god!
The favorite haunt of rich, liberal, disgusting Democrats that think they're so amazing because they shop at Target, because Target's progressive. Oh my god, Target just doesn't want their money. They're just liberal and amazing. Anyway, we're going to talk about my opinion on Target stock. And when I look at this, when I look at crap like this, on tip ranks, just the tip, they're giving you the tip, well guess what? I think they're a bunch of freaking morons, all right? This stock is massively, massively overvalued. And when you look at it, the analysts, 15 analysts, they're so smart. They have like a bachelor's in finance. They have it at, what, high of 329, low of 248? Like, holy crap, where do they get these freaking numbers from? It's like any kind of change in revenue, they just automatically project that forward going into infinity without any kind of critical thought. So if you don't know what Target is, this is Target. It's a freaking retailer, okay? It's like Walmart, but they are more expensive, and their food selection sucks, and it's a little bit cleaner. That's basically Target, okay? But they're also known for being progressive and liberal and amazing, and oh my god, we're such good people, oh my god, oh my god, oh my god! That's basically Target. So it's very popular with like, upper middle class, married suburban women that just love to go shop at a nice place and feel warm and delicious. Screw saving money for your family, but you go to Target and you feel amazing. So that's Target, okay? It's not a bad store. I mean, sometimes I'm forced to go to Target, but I'm a Walmart man. That's where my family mostly shops. It's Walmart. That's right. Getting those good deals because it's way cheaper. It's just dirtier and full of fat people, but it doesn't bother me. I mean, I'm kind of fat too. Now, let's go look at Target on ROIC.ai, Return on Invested Capital.ai. This is a completely free website. It's not pretty, it's not beautiful, it's not delicious, but it's free. So Target's current stock price is $247.57 with a PE ratio of 18.22. It's actually not that bad, and a PEG ratio of 0.49. And it actually has a PE lower than the S&P 500. That's surprising. I saw a different PE somewhere else that was way higher, so let's see, investing. No, it is 17. Wow. So they probably just had a really good freaking last couple of quarters, okay? Which is not surprising because as I've seemed to notice, there seem to be a ton of stocks that right when the pandemic started and money started being printed and thrown into people's freaking wallets, a lot of retailers and a lot of other stocks massively skyrocketed. They were flat for years, and then all of a sudden, COVID, and then they shoot up and they like 5x. It's freaking crazy. I mean, look at what happened to Target. I know it's kind of hard to see. It's kind of, I mean, they could probably make this a little bit prettier, but it's free. Now you can see, I mean, the stock was hovering around $60, $60, $60, and then the pandemic happened, and then whoom, now we're at $247. Is it returning to its intrinsic value, or is it massively overvalued? I think it's overvalued. Now, there's tons of data here, but what I did is I actually exported this to Excel, and I did a little bit of analysis. So here I put this all from Excel, and then in the bottom here I have some metrics. I have free cash flow as a percentage of sales, I have the net income ratio, profit margin, revenue growth, and share change. So let's look at each one of these starting in 2013, okay? So 2013, free cash flow as a percentage of sales, 2.79%. Next year, 4.22, 3.6, 6, 5.5, 6, 3.2, 5, 7.62. Massive spike in the last recent year. Is that sustainable for a massive retailer like this? I don't think so. Let's go on to the next one. Net income, 4%, 2%, negative 2%, 4.5, 3.8, 4, 3.9, 4.2. Well, their net income didn't really go up that much. That's funny. Revenue. Now, this is the key thing, ladies and gentlemen. This is what I think is exploding the stock's price and why it's massively overvalued. Revenue growth. This is starting from many years ago. Negative 1%. Flat. 1.6. Negative 5. 3. 3.6. 32%. Stimmy checks. People going and spending stimmy checks. Massive money printing, revenue goes up. Wow. Is the money printing going to last forever? And share change. So they actually buy back shares at a pretty decent rate. 7%, 5%, 3%, 1%. So my fundamental thesis is, if you look back at history, I mean, the revenue does not grow that quickly. It basically grows with the rate of inflation, which makes sense to me as a freaking retailer, all right? And I think a lot of their margins are going to start being compressed because they're raising wages, and there's a lot of, backlogs and supply issues, which increases their cost of goods sold. And their revenue growth, 32%, that's not sustainable, okay? That's not going to freaking happen. So I have this trusty, dusty tool that does not in any way look like Everything Monies. And I put the numbers in here. And I actually got some stock prices for TGT. It's so amazing. And you can fundamentally disagree. I mean, you can be a stupid analyst, like these clowns. Let me see. They're so smart. They're analysts. They think the average share price is 282, so it has a 14% upside from here. That's assuming that massive one-time spike in revenue growth continues. I don't believe it, okay? I need to see it to believe it. If Target's revenue really grows that quickly going forward, I would be freaking shocked, all right? This is not a growth stock. It's Target. Based on 15 Wall Street analysts. Wow, they're Wall Street. It's almost like the stock goes up, then they just change their targets to go along with it without even really considering long-term fundamentals. Shocking. Wall Street, to beach, bro. So, here's a stunk. Here's the current share price. Revenue growth. I said low, 3, 4, middle, 5, high. Share change, -2, -3, -4. They actually buy shares back pretty consistently. Profit margin, 3, 4, 5. Now you might be like, strong man, it's the future, bro. It's going to go up. I mean, look at this. I see 2, 4, 3, 4, 3, 4, 4.2. So best case being generous going forward. Profit margin, 5%. Free cash flow is a percentage of revenue. I said between 3.5%, 4.5%, and 5.5%. Go back and look at the ratios. Let's see. 2, 4, 5, 6, 3. Looks like 6 is the upper limit. Of course, they had 7.62. I'm not using that in my assumptions because that's a fluke year in my opinion. Now, let's see what else. PE. This is not a growth company. It's going to have a low price to earnings ratio. 8, 10, 12. Price of free cash flow. 8, 10, 12. Desired return. I want a 15% return on my buying an individual stock. Boyo. And what do I get for a freaking buy point? Let's see. Best case, this stock is a buy for a 15% return based on earnings multiples of $140. It's at $247 right now. Discounted cash flow, best case, $155. You know what's funny is, if you look at the low end, that's roughly what it was trading at before the pandemic go. Isn't that freaking crazy? And these seem kind of reasonable to me. 3% revenue growth, 2% share buyback, 3% margin. Free cash flow, 3. Yeah, I mean, that seems like a pretty reasonable assumption to me. But of course, you just listen to your analysts and tip ranks, because that's just how it is. So, overall, Target is not anywhere close to being a buy. Now, I know what you clowns do. You go on here and you read the analysts, and then if the stock goes up temporarily, because stocks trade irrationally in the short term, you're like, you're so stupid. Target went up $25 since this video, strong man. Well, guess what? I don't care. If you're buying the stock right now, you're buying a massively, massively overvalued, liberal, Democrat retailer, which is double gross. All right? So no, not a fan of Target stock. You can disagree. Now, if you want to access my tool, I'm selling it for $5,000. So if you pay me $5,000, I'll sell this to you. And then I'll get sued by Everything Money. But that's it. Anyway, like, subscribe, tell your friends about me. Don't buy Target, it's overvalued. And y'all have a wonderful day. Cheers!